Hello and welcome to yet another episode of the In News series. My name is Pooja Dwivedi. Today we are going to discuss and compare the two tax regimes. These tax regimes are with respect to the personal income, the income that we earn. So it is important that we clarify the aspects of the two. Other than that, why the government is not taxing the ultra-rich, this has been criticized. So we are going to discuss all that in detail from the perspective of your UPSC examination, and specifically for prelims, facts are important. And if we talk about the analytical portion, it is important that you understand it from the perspective of GS Mains Paper 3rd. Without any further ado, let us move forward and look at these many things from the perspective of our examination. First of all, what is the news? The new tax regime will now be the default option. That means until and unless you choose to have the option of the old tax regime, this will be the existing one for you. Before this is a new initiative. Why? Before this, what used to happen? People had the option of choosing the new one. That means in the current system, there are two tax regimes. The new one is the default one. That means if you have the option to stick to the old tax regime. And if you are sticking to the old tax regime, you have to specify it that, dear government, I am sticking to the old tax regime. But here, currently, before that, if we talk about the current situation, before this, what used to happen? The old one used to be the default one. And if you have to choose the new tax regime, then you have to specify that, dear government, I am sticking with the new one. So what is the psychological thing behind this? It is easier to make people do nothing. This is the basic psychological trick we can say the government has played with us. It is very easy to just accept whatever the default one is, rather than to do something that might be better for you. So it is very easy for people to be like that. That is why the government has done it. That means more and more people will think, why to bother? Let's stick with the new one. So this is the entire situation I had to give a light upon. The personal income tax has had substantial changes which will benefit the middle class. This has been said by the government. The new taxation regime has now got greater traction and incentive, and that is why people are expected to stick to the default new tax regime. Other than this, let us look at the new features of it. The standard deduction is available for the salaried class, plus those getting pension and family pension. They have the benefit of a standard deduction under the old tax regime. So this is good. No problem for the pensioners who are getting pensions under various schemes, and also for the salaried class. There is a change of slab. The slabs have changed. Okay, so you can see for an income of 0 to 3 lakh, the income tax is 0. For 3 to 6 lakh, it is 5%. For 6 to 9 lakh, it is 10%. And this is per annum, of course. 9 to 12 lakh, 15%. 12 to 15 lakh, 20%. And then above 15 lakh, it is 30%. We will compare the old tax regime and the new tax regime. Do not worry about that. Moving on. Now there is also a provision of rebate. There is a rebate that is available under section 87A of the Income Tax Act, and the current limit is rupees 5 lakh under the old tax regime. This will be higher at rupees 7 lakh in the new tax regime. The problem that we are going to discuss today is the surcharge. See, right now the surcharge is something that the government has not you can say envisioned to increase, so that the richer individuals, they do not evade taxes. So higher surcharge has been reduced to 25% from the 37% that is present in the old tax regime for income that is above rupees 2 crore. This will cap the maximum tax rate under the new regime at 39% after considering cess. Okay. Now let's compare the two tax regimes, the old one and the new one, based on the income that one earns per annum. So for an income of rupees 8 lakh per annum, if a salaried person earns, first is the old tax regime, if a salaried person earns an annual income of rupees 8 lakh, then his taxable income after claiming all the deductions and exemptions is rupees this much as per the old tax regimes. All deduction etc. means if a person has invested into tax saving schemes, is showing rent, is has invested in some other things such as insurance, then what happens? The taxable income gets reduced, and that is what we call deductions. So if that has been done, then what will happen? The exemption after deductions and exemption, the taxable income will come to 4,75,000. Now this is below the rupees 5 lakh rebate limit, and the person does not need to pay any sort of tax over here. Now in the existing new tax regime, for a person with an annual income of rupees 8 lakh who has chosen the existing new tax regime, his taxable remains the same as his actual income, that is 8 lakh only, and this exceeds the rupees 5 lakh per annum rebate limit. Now the person will pay an income tax of rupees 46,800. Okay, moving on. Now again, let's talk about the income of 10 lakh. Now of course each and every slab will be discussed. We will go up to 25 lakhs. Old tax regime, if a taxpayer has an annual income of 10 lakh, claims the rebate by taking into consideration all the deductions and exemptions that is available, then the taxable income becomes 6,75,000. This is now more than the limit of 5 lakh. So the tax which will be payable on this will be rupees 49,400. This is the old tax regime. For new one, the person will have to pay 78,000 as tax on a taxable income of rupees 10 lakh itself. And this means that by switching to the new tax regime, if you are earning 10 lakh per annum, you will pay rupees 28,600 more in the income tax. Earlier it was, you can see, the tax payable on this will be 49,400. Okay, this is the old tax regime. Now because now you will pay rupees 78,000 as tax, there is an increase. So it is better for you to stick with the old tax regime. This is my personal opinion. Income of rupees 15 lakh. Now for 15 lakh, the taxable income after deduction and everything by submitting the claims, it will be this. And after taxation under applicable tax slab, the person will have to pay 1,71,600 as income tax. Existing new tax regime, here the income will be the income tax will be 1,95,000, which is taxable on rupees 15 lakhs itself. Now here, what will you do? You will pay 23,400 more. Old tax regime it is for you. Now if you are getting an income of rupees 20 lakh, then the tax is calculated in the old tax regime on rupees 16,75,000 after deduction and everything. Now the payable tax here comes out to be 3,27,600. In the existing new tax regime, it will be 3,51,000, and this will be 23,400 more on the income tax limit. Okay, so this is again for you, it's old regime. But all this will work only if you are investing into tax saving schemes, paying rent, which makes your taxable income lesser and lesser. So this is what you have to do. Income of rupees 25 lakh, old tax regime here, the tax will be 4,83,600 in old tax regime. The taxable income here is 21,75,000, and this is subject to tax under different tax slab. Existing new tax regime is 5,07,000. Okay, and it will be 23,400 more. Now, here we have completely compared the two different tax regimes. I hope it helped. Now let's talk about a high net worth individual. Why are we discussing about an individual who is of high net worth? Because the government has decided we are not going to tax such people. It seems very odd, right? A high net worth individual in a democratic country which generally follows a progressive tax regime is not being taxed. This is such an unequal treatment, we can say. So why is this? We will discuss that. First, let's see who is a high net worth individual. A high net worth individual is someone who is who has at least $1 million in liquid financial assets. They are eligible for other increased and better benefits. Private wealth managers demand such high net worth individuals a lot, because whenever a person is a high net worth individual, what happens? There is a lot to do with the, accounting, auditing and private wealth managing, everything like that. So these people are high in value and demand by them. The United States had the most high net worth individuals in the world if we talk about 2021, with more than 7.4 million people. Okay, and then comes a very high net worth individual. Who is this person? This person is someone whose net worth is of at least $5 million, while an ultra high net worth individual is defined as having at least $30 million in assets. Remember. Moving on. Now, if we talk about India, the population of high net worth individuals rose 10.5% in India to 3.08 lakh last year, that is 2022, only second after the US. Okay. Now, why reduce the taxation on such people? Is it not equal, or is it not justified to put more taxes on their money? Because the government wants revenue, and why not take revenue from those who have a lot of it, who have a lot of money, rather than taking from the middle class? See, first of all, these high net worth individuals invest a lot. So we want investment. In the current situation, domestic funding is very low. So it is important that we value the revenue of such high net worth individuals. It should go into private investment and other sort of investment, rather than taxing the entire amount for revenue by the government. So it is to encourage more wealthy households and individuals to disclose their income. This is the primary one. Okay. It has been noticed and it has been analyzed as well that the higher the surcharge on them makes it more possible for them to conceal their wealth, not show their wealth as private wealth. So, in order to make them disclose their income, this move has been taken. Also, this will help in lower tax evasion. If the surcharge is compliant enough, why not? We should do that. So, it will also help the government have a proper amount as revenue. And unethical use of tax havens. This is used a lot by high net worth individuals. Majority of individuals started showing a larger chunk of their income under companies or businesses owned by them, so that they do not have to pay tax on their personal income, but showing that this is corporate income, we are not going to pay as much tax as we would have paid on the personal income. So this is also something to be learned. Alright. And another thing is, the Indian sector right now has seen increasingly the exodus of the richy rich. They are going to other countries because the taxation system is so heavy on them. So, data has suggested that over 1.8 lakh citizens gave up Indian citizenship as of October 2022. Henley and Partners estimated at least 8,000 high net worth individuals moved out of India in 2022. At least $23,000 millionaires have left the country between 2014 to 2018, and another global wealth migration review has revealed that nearly 5,000 millionaires left the country in 2020 alone. Now, this could, of course, significantly hurt private investment. The government wants, other than itself, for more people to invest. If the government keeps on investing without any private support, it will be bootstrapping, living from hand to mouth. So that is what the government does not need. I hope you understood this entire topic. We shall come again with another interesting topic. Thank you so much for watching.